It's almost 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks rise after Wall Street hits a fresh record high, with weaker than expected economic data supporting the case for Fed rate cuts this year. President Biden wins backing of Democratic governors after a White House crisis meeting as party pressure mounts to abandon his re-election bid. Plus, we're live to London as the UK prepares to vote, with polls still pointing to a Conservative wipeout. Even the Murdoch Sun newspaper backing Labour and Keir Starmer. All right, let's check in on how markets are faring. Avril Hong's in Singapore. Avril.
Yeah, Paul, we'll be watching political developments, of course, very closely, especially what's happening in the U.S. But for now, I think markets are preoccupied by the path of the Federal Reserve, especially after a bout of weak economic data. Most recently, the services sector contracting at the fastest pace in 4 years. And then we also got the Fed minutes from its most recent meeting. And it shows that policymakers were perhaps a bit more dovish than their hawkish dot plot let on. We also have an eye on the U.S. jobs data that is due tomorrow. But all in, it looks like those bets that we're going to see those Fed rate cuts sooner rather than later are dominating what we're seeing in markets in the Asia Pacific today. So there's a bit more trading volume as well as breadth to the climb in stocks. And we're also keeping a close watch on the topics earlier today hitting an intraday high. And this is, of course, coming against the backdrop of a pullback in the US dollar. That's helping the yen, a bit of a recovery away from the 162 level. But flip the board, the other thing I wanted to highlight is what we're seeing in Chinese tech stocks, encouraged by the climb in their US counterparts this week. And we've seen actually this year a couple of rounds of dip buying that foreshadowed upside for Hang Seng Tech. So we could see more of the same this time around. We also have mainland investors kind of piling into Hong Kong equities via the Stock Connect. So that's something to keep an eye on. Of course, this is coming at a time when mainland markets are underperforming. Economic weakness is a big factor behind this, along with potential risks coming out from developments in the US, Paul.
All right, thanks, Avril. Well, the Biden-Harris campaign says President Biden remains determined to beat Donald Trump at the ballot box. And that statement followed a crisis meeting at the White House, where key Democratic governors also pledged support as the drumbeat of pressure on the president intensifies.
The president was very clear that he is in this to win this, and the president is our nominee. The president is our party leader, and the president has told us, and he was very clear back there, that he is in this to win this.
Well, Bloomberg managing editor for Breaking News, Derek Wilbank, joins us now for more. So, Derek, what do we know about what was discussed at that meeting?
Well, Paul, we don't have a massively detailed readout on the exact topics, but the basics of it is what we all would think was discussed in that meeting. Democratic governors had been not thrilled with the White House that they hadn't gotten the outreach they thought that they needed to after Joe Biden's debate performance, and so there has been a lot of disquiet. Now, you should read into the fact a little bit that a lot of the contenders possibly, if Biden were to step aside, are Democratic governors. You're talking Gavin Newsom in California, J.B. Pritzker in Illinois, Gretchen Whitmer in Michigan, among them, right? So this is a group of people who are not only key supporters, not only representing, in some cases with Whitmer, absolutely critical swing states that Biden must win if he wants to be president again, but they're also representing the flank of people who could emerge if Biden were to step aside. Now, that having been said, in the last day or two, a lot of the talk, if Biden were to go, and let's be clear, he said flat out he's in it to win it, according to Wes Moore and others who were at that meeting. But if he were to step aside, a lot of the speculation has gone to Biden's number two, Kamala Harris. That's for a lot of reasons, but I think two of the key ones are that it's legally under U.S. law, it's a lot easier for the Biden war chest of financial, just the dollars to transfer down to Harris since she's already on those committees as well. And secondly, is that there have been polls out recently that have said that Harris might perform, A, she's outperforming Biden head-to-head in a hypothetical match with Trump, and B, she actually in one survey was showing up better against Trump than any of those governors that I named, plus a couple others.
Yes, so support does appear to be rallying around Kamala Harris as a potential replacement, but like you say, that may not even be the case. But in terms of that Democrat governors meeting, I mean, they've all coalesced around the president today. But those are governors. Is it possible that congressmen and women might have a somewhat different attitude towards what should happen before November?
Well, Paul, I think you've already seen a couple of members of Congress come out and sort of suggest disquiet, right? Lloyd Doggett has gone out so far as to say Biden should step aside. There have been a couple of lawmakers who have said that they think that Biden is on track to lose, some swing district lawmakers. But overall, most members of the House and Senate have held their fire. There are indications that, you know, there's not, how would I say, there's not necessarily some massive strategy here to get rid of Biden and put somebody else on, right? And at some point, if you're actually going to go do this, people will have to get on the record and do it. But right now, I think a lot of the people who might want Biden to go are trying to give the president space to make that decision for himself. Look, Paul, I think this is going to be a situation where you can watch really closely in the next couple of days. There's going to be a nationally televised interview with George Stephanopoulos on ABC News that ABC is going to air as a Friday night primetime special. That's Saturday morning Asia hours. Right? Friday night primetime special in its entirety. They're going to rerun it again on Sunday. Then Biden has some campaign appearances coming up. I think those are going to be, all three of those things and whatever else he does besides are going to take on way more importance than the usual media interviews and campaign appearances might do, because people will be looking at every single aspect of those. And I'll tell you, Joe Biden will be looking at that himself as well.
All right, Bloomberg Managing Editor for Breaking News in South Asia, Derek Wallbank there. Now, our next guest thinks the second Trump presidency may bring concerns about U.S. debt sustainability and higher U.S. Treasury yields. Norman Villerman is a Group Chief Strategist at UBP, usually based in Zurich today, joining us from our Hong Kong studio. Norman, thanks so much for joining us. A lot of permutations to cover off here, but I just want to pick up on that point that Derek was making. If, and it is a big if, President Biden were to withdraw from the race and we had Kamala Harris as a Democratic candidate, bets certainly surging on that. Are you gaming any scenarios around this? How would that change the picture for you?
We are starting to game out scenarios on this. Unfortunately, we don't have very much polling on a Trump-Harris election in November. What we do have suggests to us that, especially in the swing states, the trend doesn't change very much, meaning Trump is ahead in the Sun Belt in the United States, and the states where it's close, in Michigan, Wisconsin, it would remain close. But I think one of the things a change of horses in the middle of the race would do is perhaps energize the Democratic Party and perhaps energize their base and bring more people to the table.
Yeah, well, you have some views on what might happen to markets in the event of a Trump victory. Can you walk us through those? And also in the context of a lot of variables, a lot of things to consider, gold's catching a bid. Is that something that catches your eye?
Yeah, no, look, when we've looked at the scenario facing whoever takes the White House in January of next year, they're going to be facing a very daunting fiscal situation, just like we're seeing, for example, in France and in the UK. And we think the risks that have already started to play out in those economies may come over the Atlantic and begin to play out in the United States. And that is the debt sustainability question. A lot of people forget that on January 1, we're going to have a U.S. debt ceiling again, and that's going to be amidst a situation where really in 2025 you could see as much as 20 cents of every U.S. dollar collected in taxes being paid in interest. And so the markets are going to be concerned by that, just as the Treasury is running out of excess liquidity to keep funding via money market funds. And so we think on the upside, yields could see at least 5% in 2025 on 10-year Treasury.
Yeah, the debt ceiling debate is one that we all seem to have forgotten about. It's been a long time since we've had that. But how does all of this change the picture for the narrative around Fed easing as well? Because if we look at some of the data that we've had just in the past 24 hours, some weak ISM services numbers, jobless US companies are adding workers at a more moderate pace as well. And we do get the non-farm payrolls report coming out as well. Fed minutes have been somewhat dovish. On the balance of probabilities, where do you see easing take place? Before the election in September, or potentially in December, or possibly not at all?
We've got a cut penciled in for December of this year. We do think the Fed is going to be cautious. You do point out we've seen some weak data recently, but I think one of the things also underlying the picture is the inflation picture underneath the surface. So property prices remain quite strong. Wages are still elevated here. And so the risk is if they start easing, the inflation picture worsens once again in 2025. So we think the Fed will want to be cautious going into that.
Just in terms of investing opportunities a little bit closer to the part of the world that we're in now, if we take a look at markets today performing pretty well, and the topics in Japan has pushed through a closing record. Well, it's topped that. Very good first half for Japanese equities. Do you see that rolling on into the second half?
We do. We think the Japanese story is really a sustainable one. This has not been a speculative story. This is an earnings-driven story. And I think what's encouraging for Japanese corporates is those earnings are being driven by what companies are doing below the revenue line. So what they're doing with margins, how they're managing their balance sheets, how they're returning capital to shareholders. And we think that translates to a much more sustainable earnings growth story for Japan looking forward the next few years.
So we've got a Fed easing narrative and possibly a Bank of Japan tightening at the end of the month. That yen still looking very weak, 160-140 at the moment. Do you feel FX markets have got these scenarios priced in, and you know, we're not going to see the yen strengthen appreciably from here?
Yeah, we don't see a lot of yen strength on the horizon here. I think the trajectory we expect is the long end of 10-year Japanese government bonds to continue rising as especially U.S. 10-year yields start to rise. So it wouldn't surprise us to see dollar-yen really push towards 165 here.
Norman, before we let you go, are you a buyer of Chinese equities? Valuations look quite appealing right now.
The valuations are appealing, but historically they've been appealing. We think the rationale for a trade in Chinese equities really is the pickup we're seeing in some of the global growth data. We think that is now starting to spread to China. We've seen that come through the export data. And then obviously we have some policy meetings coming up here in July and August that we think will be important and potentially bring some stimulus into that system. So we think there's a trade in China going into the fall.
All right, Norman Villeman, Group Chief Strategist at UBP. Thanks so much for joining us. Still to come on Bloomberg Markets Asia, exclusive interview with Ukrainian President Volodymyr Zelensky as he calls on China to help end the war with Russia. That's up next. This is Bloomberg. Ukrainian President Volodymyr Zelensky says if Donald Trump has a plan to end the war, he'd like to know about it now. The Ukrainian leader spoke exclusively with Bloomberg about the U.S. election race and challenges around agreeing to ceasefires with Russia.
Домовлялись сторони про ceasefire. We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries, leaders who are trusted. They might have different ideas, different views on the stages, how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they have almost reached the capital city, and they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart. And it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire
But we're going to see
broken.
more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict, and it would be frozen for the aggressor, because it would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? What would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well,
I saw
because the answer of how this might all unravel will depend on also who's at the table from the United States.
Amongst other things, it might depend on who is the president of the US. Yes, that's a fact. Because the US, the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that or they want to focus more on their internal politics. I cannot say. It doesn't depend on me.
So did you watch the debate?
Yes, I watched the debates. So first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the US media, but I watched. And we are not electing the president of the US, so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard
What do you
that.
make of that?
Я скажу честно. Let me be frank. For example, well, the decision is on U.S. public. But let me just have some reasoning. Так, але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the U.S. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? We didn't the war even to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today, because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Ukrainian President Volodymyr Zelensky there, speaking exclusively with our colleague Anne-Marie Hordern in Kyiv. Plenty more ahead. This is Bloomberg. Now, some top global stories we're following. South Korea has imposed a record $19.5 million fine for short selling across 2 Credit Suisse affiliates. It's the biggest penalty yet since Korea started targeting alleged short selling violations in 2021. Korea's regulator has extended its blanket ban on short selling through to next March. Japan's annual pay negotiations have ended with the highest raises in more than 3 decades. It confirms the upward trend in wages sought by the country's central bank. The final tally from Japan's biggest union group shows that employers have agreed to raise pay by an average of 5.1%. That's slightly lower than the initial figure from March, after the group included more deals from smaller businesses. Bloomberg has learned that the EU is working on a proposal for import duties on cheap goods bought from online platforms outside the bloc. Sources say the move would primarily target Chinese retailers such as Shein, Temu and AliExpress. The EU currently has a $161 duty-free threshold for online purchases that is meant for small gifts or personal packages. All right, let's take a look at how we're tracking on China markets just ahead of the lunch break. Market as a whole kind of flat, but EV makers performing pretty well at the moment. If we just take a look at XPeng there, up by almost 1.5%. This is, well, we have seen it rise the highest since May 2022, or May the 22nd, I beg your pardon. This is launching a new model, so we've got XPeng performing pretty strongly there. Also, EV stocks doing well despite trade tensions escalating with Europe. Sales in Europe are holding up regardless of those new tariffs. Stay with us. Interview with CEO of cloud-based software platform Qualtrics up next. This is Bloomberg. We have markets in Japan about to come back from the lunch break. You're seeing Shanghai there just about to head out to the lunch break in under a minute's time. But in terms of stocks in Japan, another reasonably positive day. Avril's here with a closer look. Avril.
Yeah, Paul, we are seeing that risk on coming through for Japanese equities. Today, the topics earlier in the session hit an intraday all-time high. We'll be watching how it closes, but it looks like it's within reach of a record closing high. The number to watch is 28.4.8. And of course, helping Japanese equities this year has been the improvement to corporate governance. We've seen the cheap yen also spurring things along, but it does look like the rally is broadening out past the tech and export related related names. Let's flip the board because I wanted to talk you through what we're seeing in some of the Japanese financial stocks, the likes of Sumitomo Mitsui, one of the largest banks in Japan, as it hit a threshold in terms of value that it hasn't seen in more than a decade. Price-to-book ratio surging past 1 for the first time in more than 10 years. And this is something that we don't typically see for Japanese financial names, but because of the Tokyo Stock Exchange urging them to surpass that metric in terms of corporate governance improvements, this is something that we're seeing. MUFG, by the way, is hitting this sometime earlier in the year already. Let's flip the board and take a look at how we are seeing the Japanese stock benchmarks actually coming back from the break. There is a bit of an extension of the gains from the morning session. The Japanese yen is strengthening today against the backdrop of a weaker dollar. It's those Fed rate cut expectations spurred along by weak U.S. economic data. And we are seeing that actually overnight helping treasuries. That's providing a bit of a tailwind to Japanese government bonds. But how long will this last is the question, especially since the market seems to be pricing in or bracing for a rate hike along with BOJ bond purchase reductions come later in the month. Paul.
All right, thanks, Avril. Well, Japanese conglomerate Hitachi says it's ready to spend hundreds of millions of dollars on acquisitions. Chief Financial Officer Tomomi Kato told us exclusively that the focus of the deals will be on AI and green energy.
We have three major sectors at Hitachi, including our business sector, in which we develop software. We are developing software for our customers, and of course we do the programming and coding. But we've learned through various demonstrations last year and this year that on average we can improve the efficiency by 30% or so, and we're now trying to incorporate this into our projects. This will help reduce the time and people needed for project development. If we had more human resources, we would be able to meet customers' needs better. But if the productivity of coding is increased by the use of AI, we can take more orders and help customers looking to digitalize operations.
Which is why you're training 50,000 employees for generative AI as one of your business strategies. When do you expect all of this to start paying off in terms of, as CFO, when will it start affecting the bottom line?
I believe that we will see the effects of the return on investment starting this fiscal year. However, since it hasn't been long since the program began, the effect will be minor, and the bigger impact will come from the new medium-term management plan that will start next fiscal year.
How are you expecting those partnerships that you have with the global AI players like Microsoft and Google to factor into those calculations? We
are in the digital business, so we have customers who want to use AI but don't know how to use it, or what's the most efficient way to use it, or they want to use it but they don't want to release their confidential data to the public cloud, for example. How do we guarantee security? And how should we use the public cloud and on-premises servers, which we call a hybrid cloud? In this case, we need technology for data management. To achieve this, we of course have the technology, but for example, we do not make our own large language models, but use LLMs made by other companies and train them to become suitable for our customers and for us. In that sense, the alliances we have with Microsoft and of course NVIDIA, whose servers are crucial, are not only beneficial to us, but are also very effective in providing various solutions to our customers. I think this will help distinguish us from the competition.
The fact that we're seeing such growth in artificial intelligence and the infrastructure that might support the future, Hitachi having businesses across all parts of the economy, including, of course, a power industry, are you factoring in that as CFO when you're looking at your numbers?
The effect of generative AI is extremely high in enhancing our productivity and the solutions we provide to our customers. As you mentioned, for example, the use of generative AI naturally requires data centers, and the demand for these data centers is increasing. Data centers require electricity, which in turn requires transformers and other power equipment. We have a business model called Power Grid in the green energy and mobility sector, where we also manufacture transformers, and orders for these transformers are also increasing. In this sense, we believe there will be a ripple effect from AI to data centers to the power grid.
That's Hitachi Chief Financial Officer Tomomi Kaito speaking exclusively with our colleague Sherry Arm. Well, let's stick with the AI theme. Our next guest runs Qualtrics, a company which offers web-based survey and data analysis software. Some of its customers include Hilton, American Express, Porsche and Adidas. It's introducing new features to its customer experience measurement applications that incorporate generative AI capabilities. And we're joined right now by CEO Zig Serafin. Zig, thanks so much for your time today. I just wonder if you can tell us a little more about how Qualtrics is leveraging AI to help enable personalization.
Well, Paul, thanks for having me here. And I'm here at a conference here at the ICC in Sydney, and we have thousands of leaders that have come together here during this conference, focusing on key business challenges around growth, savings, productivity in their businesses, and they're focused specifically on how to meaningfully connect with, understand, and act on what's on the minds of their customers and their employees in order to be able to differentiate their businesses. And these are people across healthcare, across all sorts of the private sector, and they're all comparing notes and they're all working together, because the reality is that companies that are focused on understanding their customers best and their employees are becoming front-running leaders in their marketplaces. And Qualtrics' role in this is we have a platform that is powered by AI that's central to enabling the ability to be able to listen, understand, and act at scale.
So can you give us maybe an example of, say, you've got two customers from the same company or service. How can they get a different experience based on the use of your software?
And what Qualtrics does is it actually helps to understand the moment you engage with a customer, say on a digital channel, they're on your app, and you start to build a relationship. You start to understand their preferences, their needs, what they're delighted by, what they might be frustrated by. And we create a continuum of understanding across every interaction, whether they're in your store, whether they're in your hotel location, all the way through to when they need support. And we help to create real-time action using AI modeling in a very sophisticated way to be able to drive a culture focused on experience. And this brings together the way that you end up innovating on your products, the way that you end up acting or intervening in the right moments with your customers, and ultimately building deeper and even more emotional connections between the customer and the brand.
So give us a sense of how effective this is. I mean, do you see a measurable impact from this?
We're seeing companies like Hilton, American Express, Porsche, Xero here locally, DoorDash, Atlassian. It's creating, in some cases, hundreds of millions of dollars of business impact, both on cost efficiency, but also in revenue growth. Companies that are noticing 2-3 points of increase in growth the moment they start to use our platform as part of how they scale their knowledge around customers and ultimately help every department in the company to be operating off of a same single sheet of understanding of what their customers really want. And also those customers they don't understand, they use our platform to be able to gain a deeper connection with them and then use that to be able to outpace their competition.
So you gave us some examples of a fairly diverse set of customers there in different industries, be it travel or leisure. Where are you seeing the most growth at the moment in terms of industry for this sort of service?
A lot of the growth has to do with companies that are in services industries where there's a combination of digital and human interaction that takes place. And of course, that means there's a wide variety from travel to hospitality, financial services, last mile delivery services. Most high-tech companies are using our platform in one way or another. We're also finding that state and local governments are using our platform. And that's because the customer that ends up interacting with the private sector comes into the public sector, and they have similar expectations on how they end up interacting and consuming the services, gaining access to programs that governments have available. And so we actually are finding that, yes, while it's spurred in specific industries, Qualtrics' platform now is being used across many different dimensions of everyday life. And most, this conference, I think, is a very good example where most of every industry is represented here locally, and people have flown in from all over the Asia-Pac region to be a part of this conference.
Yeah, and I understand you're usually based in Utah, but here you are in the Asia-Pacific. What sort of growth opportunities are there in this region?
We're seeing tremendous growth from Singapore to Australia to Hong Kong, our work in Japan, Indonesia, Vietnam, Korea. Every market right now, businesses are looking to what businesses are doing in other markets. And they're saying, look, we need to use this as a bit of a catch up, because what they're taking note of is the fact that these leaders who are focused on experience usually have the highest profitability in their particular industry sector. And that usually corresponds with growth rates that are faster than potentially what their competitors are doing. So as a result, we're seeing a significant pull factor. And Sydney here in Australia is our regional operating headquarters, where we have everything from scientists and researchers and practitioners to technology partners. And we're seeing a significant growth wave that's coming from that.
All right, Zig Serafin, CEO of Qualtrics, thank you so much for joining us today. Let's get to some more corporate stories that we're following now. Santos shares jumping in Sydney after Bloomberg revealed that Saudi Aramco and Abu Dhabi's ADNOC have been separately studying potential bids for the Australian gas producer. And that's as the Middle Eastern energy giants seek to ramp up their foreign gas investments. Santos has LNG projects in Australia, Papua New Guinea and Timor-Leste. Sources say Santos could also attract interest from other potential buyers, and deliberations are ongoing. JP Morgan's chief global market strategist Marko Kolanovic is leaving after 19 years at the bank. An internal memo obtained by Bloomberg says he's leaving to explore other opportunities. Kolanovic had a disastrous 2-year stretch of calls on the US stock market, staying bullish as the S&P 500 tumbled in 2022, and then turning bearish just as the market bottomed and rebounded. Coming up, hear why investors and strategists are expecting more upside ahead for India's stock market. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India Focus. Here's a look at Indian markets just ahead of the open, which is happening in about a minute's time. Looks like we're setting up for a positive start. Rupee, meanwhile, still hovering around those record lows. And market watchers say Indian stocks could see as much as 20% upside this year, and that's as investors bet on the upcoming Modi government budget to boost consumer spending and infrastructure building. For more, let's bring in our Asia Equities reporter, Ashutosh Joshi. So, Ashutosh, what's the mood like among Indian equity investors right now?
Yeah, hi. The mood in the Indian equities market obviously remains overjoyed. The index has already gained, the Nifty index is already up 12% this year. And Bloomberg survey of market participants showed that the index has potential to end this year with a gain of 20%. That would be something similar the index did last year. The last leg of this rally is driven by large companies. We have seen firms such as HDFC Bank and Reliance Industries surging to their peak levels, while at the same time we continue to see a sharp rally in smaller and mid-cap stocks as well. So overall the sentiment remains bullish.
So are there any signs of worry at all in the market, or is it just a bullish sentiment all the way?
Yeah, there are some areas where some market participants sound a bit cautious. The Nifty 50 index, which is India's benchmark, is trading at its most expensive level in last 2 years. It's back to it's nearing its peak expensive levels. The index is also trading at overbought levels, which sounds some caution on the technical side. But on the macro picture, the investors are still optimistic that this rally has more scope to go ahead with the elections now, the key event of elections over. The focus is now on budget, where robust macroeconomic situation allows the government to spend more on boosting consumption, which is an area that it will prioritize, as well as infrastructure building, which remains a key focus for the government.
Well, we've seen a bit more regulatory scrutiny recently, particularly around brokers. What are the key takeaways from this?
Sure. India's markets regulator, SEBI, has sounded caution in some aspects of the market in recent months. It started with caution over flows into small cap mutual funds, another area where valuations are overheated. We have seen a commentary from the regulators as well as government about retail participation in the derivative space. And earlier this week, we saw the regulator asking exchanges to fix the discount brokerage system, which essentially hurts some of the biggest brokers in the country. These measures are aimed at sounding some sort of caution over the market, and that is a takeaway from here.
Yeah, we do have the market rising at the moment in the early going. We're up about 10% now from last month's sell-off just before the election. Do things look a little overbought, perhaps? Is there a risk here of a pullback?
Yeah, if we look at the technicals, what are indicating, there is a scope for the rally taking a bit pause. But based on our survey of participants, looks like the market is pretty confident that by end of the year, there is scope for further rally. And this year could match what we saw in 2023.
All right, Asia Equities reporter there, Ashutosh Joshi. And let's take a look at how Indian markets are tracking at the moment, and pretty much following the lead from the rest of the Asia Pacific right now. We've got equities moving higher in India right now. We've got the Sensex better by 0.25%. Nifty Bank Index looking a little bit flat though. Still to come, it's election day in the United Kingdom. Voters heading to the polls. We're going to break down the possible scenarios on election day. This is Bloomberg. Voters in the UK heading to the polls today for the nation's general election. Our UK correspondent Lizzie Burden joins us now from London to walk us through the potential outcomes. Lizzie.
Well, Paul, all the polls suggest that history is about to be made today. A Labour victory ending Conservative rule of 14 years. But the bookmakers are really interested in how big the Labour majority is going to be. So let me run you through the scenarios they see as most likely in order of likelihood. So the top scenario is a landslide of 250 plus seat majority for Labour. This was, Paul, barely conceivable 5 years ago after the last general election. You'll remember Jeremy Corbyn led the Labour Party to near annihilation by Boris Johnson's Conservatives, but all the polls suggest that this supermajority is what's going to come out of this vote today. Supermajority, of course, a word imported into the British political lexicon by the Conservatives to warn against giving the Labour Party untrammelled power. It would mean that they could get their policy programme through Parliament easily, but it would also be a double-edged sword for Keir Starmer because he'd be under more pressure to go more radically for economic growth. Now, let me take you on to the next scenario that the bookies see as next most likely, and this is a 150-plus seat majority for Labour. To put it into historical context, back in 1997, Tony Blair won a 179-seat majority, and that kicked off 13 years in power. Boris Johnson in 2019 2019 won an 80-seat majority. So this would be a still big deal for Keir Starmer, but it would save the Conservatives from extinction, so a bit of relief for them. The next most likely scenario would be a 50-plus seat majority for the Labour Party. And there was a time when this, again, would have been a big deal for Labour. But nowadays, after Boris Johnson's Partygate and Liz Truss's 49-day premiership, this would be somewhat of a disappointment. And I can tell you now, the headlines on Friday, tomorrow, will be along the lines of what went wrong for Keir Starmer. How did the Conservatives manage to save themselves from extinction? But an even less likely scenario, according to the bookies, would be even worse for Labour. The next one, a hung parliament. And this would mean that Labour gets the most votes, but either has to form a minority government or a coalition with the Liberal Democrats. And the question then becomes, what do the Lib Dems want to extract from Keir Starmer in exchange for their cooperation? Would it be proportional representation? Would it be closer ties with Europe? And if Starmer can't stomach that, would he need to go back to the public for another general election? And the financial markets are not going to like that. Now, Paul, I've just thrown in one last scenario here. It's the wild card. And this is where the Liberal Democrats become the official opposition. It would be a huge shake-up of the two-party system in Westminster, because ever since the First World War, the Conservatives or Labour have been the opposition. But if the Lib Dems manage to make significant inroads into Tory heartlands in southern England, this is what we could see. It's not impossible, but it is unlikely. Paul.
All right, Bloomberg's Lizzie Burden there in London ahead of Election Day. A number of potential scenarios there. And do join us for special election coverage when polls close. That's at 10 p.m. London time, and that is with Francine Lacroix on Bloomberg TV. All right, let's take a look at how markets are tracking, particularly in Europe, ahead of that election in the UK. FTSE futures, perhaps unsurprisingly, pretty quiet ahead of Election Day. Euro stocks futures also looking quite flat at the moment. And let's not forget, there's another election in France on the weekend, second round of voting for parliamentary elections there. Let's take a look at how FX markets are tracking as well. We saw the dollar backing off a little bit after a set of dovish Fed minutes, soft ISM services data as well. We're going to get jobs data out of the US on Friday. So we've still got a very weak yen, 161.55 at the moment. The pound unchanged ahead of the election coming up in Britain. Not a lot of change there for the euro either. All right, that's just about all we have time for. Let's just take a look at what's moving on global markets at the moment as well. There's the board for you. It's a fairly risk-on day across the Asia-Pacific at the moment. Taiwan performing pretty well. The TAIEX better by 1.3%. Here in Australia, the ASX better by 1%. All right, that is it from Bloomberg Markets Asia. Horizons Middle East and Africa up next. This is Bloomberg.